In this video, we'll be exploring the controversial role of Paul Singer's hedge fund, Elliott Management, in the bankruptcy of Argentina. For those who may not be familiar, Argentina has a long and tumultuous economic history marked by periods of growth and prosperity as well as deep recessions and debt crises. In the early 2000s, the country found itself on the brink of financial collapse, and at the center of the storm was a small group of investors led by none other than Paul Singer and his hedge fund, Elliott Management. But who is Paul Singer, and how did his hedge fund bring down an entire country? In this video, we'll delve into the story of Elliott Management's involvement in Argentina's debt crisis and the consequences of the country's bankruptcy. We'll also consider the broader implications of this case and the role of hedge funds in global financial markets. Paul Singer is a billionaire hedge fund manager and the founder of Elliott Management, one of the largest and most successful hedge funds in the world. Singer started his career as a lawyer before entering the world of finance, and he quickly gained a reputation as a savvy and aggressive investor. He is known for using a variety of tactics to make money, including buying distressed debt at a discount and then using the legal system to force repayment at full value. This approach, known as vulture investing, has made Singer and Elliott Management billions of dollars, but it has also sparked controversy and criticism. Elliott Management is a hedge fund that manages billions of dollars in assets for institutional and individual investors. The firm uses a variety of investment strategies, including activist investing, which involves taking large stakes in companies and then pushing for changes in management or strategy. Elliott Management has a reputation for being highly influential and successful, but it has also faced criticism for its aggressive tactics and for pushing companies to make decisions that may not be in the best interests of all shareholders. In the early 2000s, Paul Singer and Elliott Management became involved in Argentina's debt crisis, and their actions would have far-reaching consequences for the country and its people. In the early 2000s, Argentina found itself in the midst of a severe economic recession and was struggling to pay off its debts. The country had defaulted on its bonds in 2001 and had been negotiating with its creditors to restructure its debt. However, a small group of holdout creditors, led by Paul Singer's hedge fund, Elliott Management, refused to accept the terms of the restructuring and instead demanded full payment on their bonds. Elliott Management and other holdout creditors, known as vulture funds, used the legal system to their advantage, suing Argentina in various jurisdictions and obtaining court orders to seize the country's assets. They also lobbied for changes to laws and regulations that would make it harder for Argentina to restructure its debt and pay off its creditors. The actions of Elliott Management and the other holdout creditors put immense pressure on Argentina, which was already struggling to recover from its economic recession. In 2014, the country defaulted on its bonds again, and it has been locked in legal battles with its creditors ever since. The ongoing legal wrangling and the inability to restructure its debt have had severe consequences for Argentina and its people, including high inflation, a weakened currency, and social unrest. The consequences of Argentina's bankruptcy have been severe and far-reaching. The country's economy has struggled to recover, and its people have faced high levels of inflation, a weakened currency, and a decline in living standards. The ongoing legal battles and inability to restructure its debt have also damaged Argentina's reputation and made it harder for the country to access international financial markets. The social and political impacts of the bankruptcy have also been significant. The crisis has led to widespread protests and social unrest, as people have grown frustrated with the government's inability to address the economic crisis and improve living conditions. The bankruptcy has also fueled ongoing debates and controversies over who was responsible for the crisis and whether it could have been prevented. Some argue that the government's economic policies and mismanagement were to blame, while others point to the actions of hedge funds like Elliott Management and the holdout creditors who refused to accept the terms of the debt restructuring. Regardless of the causes of the crisis, it is clear that the bankruptcy has had a profound and lasting impact on Argentina and its people. The case of Argentina's bankruptcy and the role of hedge funds like Elliott Management has broader implications for global financial markets and the balance of power between investors and sovereign nations. The ability of hedge funds to use the legal system to their advantage and force countries to pay off their debts at full value has raised concerns about the potential consequences of allowing such a small group of investors to hold so much influence. There are ongoing debates over whether the actions of hedge funds like Elliott Management are justified or whether they are predatory and exploit vulnerable countries. Some argue that hedge funds play a valuable role in holding countries accountable and ensuring that they pay their debts, while others argue that they can disproportionately harm the most vulnerable and disadvantaged. The Argentina case also highlights the importance of reforming the global financial system and finding ways to better balance the interests of investors and sovereign nations. It has sparked discussions about the need for more transparent and fair rules for restructuring debt and resolving disputes between creditors and debtor countries. Overall, the case of Argentina's bankruptcy and the role of hedge funds like Elliott Management raises important questions about the role of finance in the global economy and the potential consequences of allowing a small group of investors to hold so much power and influence. In conclusion, the case of Argentina's bankruptcy and the role of Paul Singer's hedge fund, Elliott Management, has sparked ongoing debates and controversies over who was responsible for the crisis and whether it could have been prevented. The consequences of the bankruptcy have been severe and far-reaching, with the country's economy struggling to recover and its people facing high levels of inflation, a weakened currency, and social unrest. The case also has broader implications for global financial markets and the balance of power between investors and sovereign nations. It raises important questions about the role of hedge funds in the global economy and the potential consequences of allowing a small group of investors to hold so much influence. Ultimately, the case of Argentina's bankruptcy serves as a cautionary tale and a reminder of the potential consequences of allowing a small group of investors to wield such power and influence. It highlights the need for reform and for finding ways to better balance the interests of investors and debtor countries.